Hey folks, welcome back to the channel. Today I want to point out something strange going on in the market that has to do with the bullish percent index, which uses a point and figure chart, so it looks something like this with X's and O's instead of a bar chart or a line chart. This index is a breadth indicator which has been pretty accurate in marking when the stock market has been overbought. So if we look at the index in the last few years, anything over 70%, which is this blue line here, means that the market is overbought. So similar to like an RSI indicator. And at least over the past few years, if we look at the bullish percent index on the top here and compare it to the S&P 500, this chart on the bottom, we can see every time the bullish percent index reaches 70 and then turns down, it marked some kind of top in the stock market. That's what these blue circles are highlighting. So that's been the case for the last few years. If we take a look at a more recent graph of the index and we can draw a line at the 70% mark, which is right here, and if I overlay the stock market on top of this, that's on the bottom, when the index gets turned around, it tends to mark a top in the stock market here in 2023. So this was last year in February. It went just over 70 and then came back down, and the market had a correction. And similar in August, later in the year, the index went up and down and it formed some kind of top in the stock market and we had a pullback. And this is why in last week's video, which was right here, I mentioned that the following week, the market probably won't move much higher, will probably go flat or start to go down, because looking at not only this indicator, but a lot of other ones, there was just a lot of reasons to be bearish. However, that is not what the market did. It continued to go up this past week, as you can see with this big green bar. And that's why I'm saying it's been kind of weird, because at the beginning of this year in 2024, the bullish percent index went above 70 and it came back down below 70, so it's actually going down, which historically, if you look at the past few years, has pretty much always led to at least a temporary top in the stock market, and you see some kind of correction. But from the current data we're seeing, that's not happening. The bottom chart here is the S&P 500, and it's diverging away from the bullish percent index because while the index has been going down, the S&P 500 has been continuing to go up. So that's a first time in recent history. And why is this the case? Short answer is I don't really know, but it might have something to do with the jobs data that came out on Friday. Economists were expecting 185,000 jobs created, but the actual number came out at almost double the expectation. So that's very positive for the economy. And also on Friday, or Thursday evening actually, Meta released earnings and it beat expectations both on revenue and earnings per share, which sent the stock up 20% in a single day on Friday. And I think that's most of the reason for this large green candlestick on Friday. Otherwise, if it wasn't for Friday's move, the week would have finished pretty much flat. Now, whether the market's going to continue going up or not is going to depend on if there's going to be follow through this upcoming week. And there's going to be quite a lot of earnings. So we have Caterpillar, McDonald's, before the bell on Monday. Tuesday, we have Spotify, Snap, Chipotle. Wednesday, a lot of companies as well, including Alibaba, Disney, and PayPal. So if earnings continue to beat expectations this upcoming week, then I would expect the stock market to continue going higher. So by this upcoming week, I think we will know where the market wants to go. But for now, because momentum is so strong going upwards, like if I look at the daily chart, the MACD is well above the zero line and the RSI. It's getting close to that overbought territory, but it's still heading upwards. Things can be overbought for a long time before the market starts going down. So if we follow the trend, then the market should continue to go up next week, and we should be able to see it hit 5,000. Or if you look at the SPY, then the market should be able to hit 500 sometime next week, just based on the current trajectory that is going up at this angle right now. And it could hit it by as early as Wednesday on February 7th. Now, if it falls below this purple resistance line over here, then that is when I might start to get bearish. But until then, it's likely that we'll continue to see higher prices because so far every minor correction has been a buy the dip opportunity and people have just not been selling. Now, we are seeing some news that insiders on Wall Street are selling their shares during this earnings season. So that could be a sign that we're starting to peak out, but it's more accurate to follow the price action, and it's better to be a little late than too early. Because if you're following the price action, then you can't be too late, but you can always be too early if you're trying to time like a top or bottom. So that's just a quick note for this week. Thanks a lot for watching, and until next time.